You are watching Market Watch, the brief overview of the key events from the world of finance. Last week we will remember the steady rise in oil prices, as well as the recovery of Bitcoin. In the current week, attention should be paid to the upcoming publication of data on the U.S. labor market, as well as the decision of the Federal Reserve System on the key interest rate. But let's take it in order. The oil market remains under the power of buyers, as restrictions on its production from OPEC+, as well as problems with transportation through the Red Sea remain relevant. To all this, last week information was added about an unexpectedly strong decrease in reserves in the United States, an explosion at an oil refinery in Russia, and the inability of the latter to sell more than 10 million barrels of oil stuck on tankers off the coast of South Korea. The oil market remains bullish, but only further growth of the U.S. economy is able to keep black gold quotes from declining. Recall that a significant slowdown in the world's largest economy, which also remains the largest consumer of oil, may provoke a wave of sales. But there are no obvious prerequisites for the development of this scenario. Therefore, the lack of a quick solution to the problem of the security of trade routes through the Red Sea, as well as the export of Russian oil, will contribute to a further increase in oil prices. Let's also pay attention to another bull market, Bitcoin, which has significantly recovered by the end of last week. A significant slowdown in the outflow of funds from the largest cryptocurrency fund, Grayscale Bitcoin Trust, returns investors' confidence in the market. If the trend does not change, and investors do not resume selling shares of this fund, then you should not count on another return of the largest cryptocurrency below 40,000. Moreover, the total inflow of funds into ETFs will contribute to the growth of Bitcoin, although this may take time. After all, before exchange-traded investment funds start buying Bitcoins again, they need to sell a significant part of the shares of already established funds. And now let's move on to the key events of the current week. Let's start with the upcoming publication of final data on changes in the level of business activity in the manufacturing sector, as well as in the U.S. service sector. Confirmation of the preliminary data may support the U.S. dollar. But a more significant event will be the comments on the decision on the Fed's key interest rate. The probability of its change is very low, so all attention will be focused on comments on this decision. And on Thursday and Friday, data on the U.S. labor market will be published. Only a really severe deterioration in the situation can increase the likelihood of a rate cut in March. But this is an unlikely scenario. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.